Good morning, everybody. It is Tuesday, February 11th, and we are going to do our COT report for this past Friday. We are a day or two late getting this out due to some illnesses, but we had our washing machine on rinse and repeat this past week as we played out the same patterns again and again, and we stayed just inside our rotational zone. Timing the cycle of this washing machine may seem challenging, but having the proper tools and indicators to know where in the cycle we are helps tremendously. We'll review this past week and get you ready for what's to come. But first, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So, commercials did add to their net short position last week, just a little bit. Nothing, again, near our triggering levels. We're still only at a score of 35, so quite a ways away. And if this is starting to sound a lot like last week's video with the washing machine, it's because the pain trade is still the same. Systematics and fund managers added to their positions only to get shaken out again on Monday, and then to rebuy as the week went on for another multi-billion dollar in losses to our systematics as the market came down again on Friday. And we had a lot of our same patterns repeating with the insurance plays and the business cycle that we're in, and then the risk window is starting to shift. And this week will be a chance for moving week before the business cycle really ends. And we have a few key points to watch this week with catalysts in the insurance cycle, risk premiums, our line in the sand, and capital that's on the sidelines. So this past week, we had posted our plan at on Monday morning around 3 a.m. We posted those levels, and you can see that the market just respected them. At RTH, we came right down to the tick to our lower rotational, and then right up, we hit the tick high of the week right at our rotational zone. And this is a proprietary indicator that we build these levels on that helps to understand what is likely going to happen in terms of ranges. And this is one of the tools that we share with our students in our courses. Now, for for how to use these, because I've gotten a lot of questions from people on not just the levels, but how to use them. And it depends on what your trading duration is. We focus on both multi-day trades and intraday trading. So we have plans for both a weekly plan for a bigger picture and how that fits in then with our daily plans and the smaller picture and the littler undulations that the market has. We always look to minimize risk and maximize gains. So we watch our levels when price gets close and then dial into our smaller time frame charts, our execution charts. And we go over those with our students as well. And whatever your time frame is, whatever chart you're using, whether it's a tick chart, a Renko chart, a time-based chart, you would dial into that chart that you look for and then find your entry signal for the larger moves. And Monday, if we look back at what happened this past week, Monday we had our pushback to our line in the sand after our gap down. And then we had on Tuesdays, we went into Jolts. We had everybody buying insurance, and then the big push up as that failed to materialize. And again, we look at this consistently as a factor in the markets that we started the day, people weren't very protected, and all of a sudden, everybody was now scared. And at 10 o'clock, and then we see that play out time and again where everybody buys the insurance and then the insurance market moves it up to collect the premiums. The rest of the week, we stayed with that as we went into ADP, everybody buying insurance and then back up. And then as we came into Wednesday or Thursday, excuse me, as we came into Thursday, we had Trump speaking in the afternoon, we had Amazon earnings after the bell, and then we had NFP on Friday. So everybody wants to wait until the last minute. And again, we go over this. This is one of our tools that we have. We look at the time and we get this update every 5 minutes, but you can see at 2:30 where we were positioned for Amazon earnings and for NFP. And then you can see at 3 o'clock, everybody started buying insurance all at the same time. So that's what's creating that downward pressure. And if you can identify when this is likely going to come in, as we had mentioned that it was going to be an afternoon based day, then we get the bigger move up and continued until consumer sentiment. And after all of that insurance had been collected, all those premiums had been collected for about an 85% gain, then the market could sell off. That is what is creating the market is the flows that come in from our systematics, from individuals for their retirements, from our market makers, from people that need to buy insurance. All of these factors tie in. And if you can follow where the flows are going to come in and when they're likely going to come in for their business purposes, you really enhance your edge. And so we had several large catalysts last week with Jolts, ADP, Amazon earnings, NFP, consumer sentiment, and then the many tweets and speeches from the president. And this week we'll look for some of the same. And we want to look at the week ahead for where we are likely going to be, and we're looking for rotational price action between 6,008 and 6,141 with our pivot at 6071. If we break 6,001, our lower targets are 5925 and 5880, and if we break to the upside 6141, our targets become 6225 and 6260. As we look at the week ahead, one thing we're noticing is our risk window is starting to close. We saw when it started to open, and that's what's created this move lower. And now we are seeing this risk window begin to close right at the time when we're getting a business cycle that's going to end. And that is going to be key to watch in the next week to 2 weeks, because if that risk window closes and a new business cycle opens, then we are more likely to see an upside based move. Again, we will check this regularly. We look at this every day. We'll go over this maybe every couple of weeks on these videos. But if these are helping you, don't forget to like and subscribe. And if you're sick of looking for a perfect indicator or someone telling you a single setup that will always work, only to find out for yourself that it doesn't, if you want to level up your trading and learn properly how to read a market and have access to these proprietary tools that show you where billions are sitting and what the situation is and have a go anywhere strategy. We go into this in detail with our students in our courses and spend hundreds of hours between education, intraday session, reviewing of journals, and one-on-one mentoring so you can trade any strategy, instrument, and duration. Classes begin next month. Be sure to check out our website for those. Have a great week, everybody, and stay safe trading.